Just a couple of months ago, everyone was saying that altcoins were dead.
They are expired. They're dead.
Then, Ethereum pumped over 50% in July, and we're starting to see capital rotate down the altcoin stack, just like in every other crypto cycle. Solana is one of the first in line for these flows, so it should come as no surprise that Sol has pumped a lot in recent weeks. What is surprising, though, is just how much more it could pump by the end of 2025. And that's why today we're going to update you on what Solana has been cooking, analyze Sol's price action, and see whether its upcoming catalysts will be enough to take it to 4 figures. My name is Nick, and you're watching the Coin Bureau. Before we dig in, you need to know that nothing in this video is financial advice. It's educational content intended to inform you about Solana. Also, do keep in mind that some members of the Coin Bureau team hold Sol in their personal crypto portfolios, but you can rest assured that we will be as objective as possible in our analysis. And if you want to know what other cryptos we hold, then check out the Coin Bureau Club. That's where we do deep dives into promising altcoins every single week, provide daily crypto market updates, and discuss emerging narratives in the members' Discord. The Coin Bureau Club will soon be undergoing a massive upgrade and price increase, so be sure to lock in the OG members rate by becoming a member using the link down below in the description before it's too late. Now, it's been about 4 months since we last covered Solana, and it's safe to say that a lot has happened since then. Shortly after our video went live, Solana had its Accelerate conference, which consisted of 2 events, Scale or Die, which was specifically for developers, and Ship or Die, which was for a broader audience. Now, to be honest, Ship or Die was a bit underwhelming based on the presentations and discussions we saw. The only one that caught our eye was a fireside chat with David Rutter, the CEO of R3. Now, for context, R3 is a popular institutional blockchain that's been around for a decade and has been working on tokenized real-world assets since long before it was a hot topic in crypto. In the fireside chat, David revealed that R3 will bring, quote, all 25 networks in the Corda ecosystem to Solana in the coming months. And this means that there are going to be a lot more tokenized RWAs launching on Solana very soon. In fact, there's already been a surge in tokenized RWAs on Solana since May this year. Data from RWA XYZ reveals that Solana is in the top 10 RWA blockchains with over $500 million of TVL. Now, we'll come back to tokenized RWAs in just a second, but 2 other milestones from May that are worth noting were the launch of Solana's attestation service and MetaMask adding support for Solana. In the case of the former, this makes it possible for institutions to do things like issue verified credentials on the Solana blockchain, such as KYC, for example. Obviously, stuff like this will be required if Solana wants to continue growing its internet capital markets ecosystem. Now, when it comes to the latter, MetaMask adding support for Solana is a bigger deal than you might think. And that's because it's reportedly the first time that MetaMask has added support for a non-EVM blockchain. And this suggests that key players in the crypto industry, specifically key players in Ethereum's ecosystem, see Solana as a serious project that's likely to be around for a long time. On that note, in June, a blue-chip crypto project on Ethereum called Maple Finance expanded to Solana. We actually covered Maple Finance for our Coin Bureau Club members, but the TLDR is that Maple Finance is an institutional lending protocol that lends primarily to crypto companies and is a key part of crypto's market infrastructure. Its expansion to Solana underscores Solana's growing importance. But back to those tokenized RWAs. As some of you might have heard, Backed Finance launched a series of tokenized stocks on Solana at the end of June, with multiple exchanges adding support for these so-called X stocks. Now, what's crazy is that you don't need any KYC to trade X stocks. You can literally do it from within your Solana wallet 24/7. And you can learn more about X stocks using the link down below. And while you're down there, smash that like button if you're enjoying the video so far, and subscribe to the channel and ping that notification bell so you don't miss our next video. Now, another big thing that happened to Solana in June was the accumulation of SOL by Solana Treasury companies. Now, there may have been too many announcements to cover here, and there's more coming out every single day, so we'll just direct you to the Solana Treasuries tracker in the description. At the time of shooting, 17 companies have accumulated more than 3% of SOL's supply and counting. And by the way, it's not just the Solana Treasury companies that have been stacking Sol either. In case you missed the news, a staked Solana ETF was launched by Rex Shares and Osprey Funds in July using an SEC loophole that's quite frankly outside the scope of this video. According to the Rex Shares website, the staked Solana ETF has nearly $300 million in assets under management, which is solid given it's been around for just 2 months. Speaking of which, you're probably wondering when the actual spot Solana ETFs will launch. Well, according to Bloomberg ETF analyst James Seifert, the final decision date for the standard spot Solana ETF applications is the 10th of October, which is basically around the corner. Given how much the staked spot Solana ETF has grown, it's safe to assume that the standard ETF will do well too, but more on that later. Now, of course, this all sounds very bullish, and what's funny is that there's another bullish announcement involving the recently listed crypto exchange named Bullish. In July, Bullish announced that it had partnered with Solana for its institutional stablecoin push. Newsflash, but this further highlights Solana's slow pivot towards institutional adoption, which seems to be going pretty well. Make no mistake, the retail degens on Solana are alive and well too, and you can tell because in July, Pump.Fun managed to raise a whopping $500 million in its ICO, and it has recently been raking in unprecedented amounts of fee revenue. Naturally, this fee revenue is being used to buy back the Pump token, which recently went parabolic, and you can learn more about that by using the video right over here. Now, in August, Solana's Seeker phone started shipping, with 50,000 delivered so far. Now, for reference, there were reportedly over 150,000 orders of the latest phone compared to just 20,000 orders of Solana's earlier Saga phone, presumably because of the lower cost and expectations around airdrops. Solana's phones seem to be a key part of Solana's new strategy, which we'll come back to in a bit. Now, on the technical side, the Solana Foundation announced the launch of Solana Bench, an open source tool to help developers launch AI protocols on the Solana blockchain. As some of you will know, there's been a big push to merge crypto with AI, particularly in respect of stablecoin payments. Solana is one of the cryptos on the cutting edge in this sense, but fortunately, or unfortunately, Solana is struggling to change the reputation as a degen chain, and headlines like Solana's bonk meme coin getting a treasury company probably don't help. And this is a problem because we're at a stage in the crypto cycle where investors are more focused on fundamentals. Case in point, Ethereum finally flipped Solana by DEX volumes in August. Not only that, but it was also revealed that USDC stablecoin issuer Circle and payments processor Stripe would be launching their own blockchains. And this arguably spells trouble for Solana, especially because it had positioned itself as the de facto blockchain for Circle's USDC, and was angling towards payments with PayPal's PYUSD. If PayPal also launches its own chain, it will be very bad news for Sol. And yet, despite these headwinds, institutional investors continue to be bullish, with Bitwise CIO Matt Hogan saying the quiet part out loud. Continued accumulation by Solana treasury companies and the apparently imminent launch of the spot ETFs could be enough to take Sol interstellar. After all, it's worked for Bitcoin and Ethereum, so it's probably going to work for Solana too. And this, of course, brings me to the moment you've all been waiting for, and that's an analysis of Sol's past price action and its future potential. Sol is up around 35% since we last covered Solana in May, and in retrospect, it's expected. The entire crypto market started pumping in July and has been slowly grinding higher ever since. And this pump was primarily due to the passing of pro-crypto legislation, namely the Genius Act. We actually predicted that the passing of the Genius Act would be a bullish catalyst for Solana, just because it's one of the top blockchains for stablecoins. What we didn't anticipate, though, was that Ethereum would take the spotlight first. But in retrospect, this was also expected. When capital starts to flow from Bitcoin into altcoins, Ethereum is the first stop, and the next one being the other larger caps down the market cap rankings. Now, this is where things get interesting. Sol appears to be approaching a key resistance level against both BTC and ETH. And this means that Sol's outperformance relative to the rest of the crypto market could be close to being over, at least in the short term. However, this doesn't mean that Sol won't continue pumping in fiat terms. If the crypto market rallies, then Sol will join. It just might not be the leader in that rally. And if you need additional evidence that Sol could be about to take a bit of a breather, then look no further than its on-chain analytics. Now, the number of active wallets on Solana has been in a continued decline since the start of 2025. And as we noted in one of our previous Solana updates, when you see a divergence between price and on-chain activity like this, it foreshadows a crash in the coming weeks. The catch is that other on-chain indicators suggest Sol could continue powering higher. Take total value locked, for instance. The TVL on Solana has started hitting new all-time highs, despite Sol's price not being up to its all-time highs yet. And this means that additional capital is flowing into Solana's ecosystem, either from other chains or from within the Solana blockchain itself in the form of borrowing, using Sol to borrow stablecoins to increase liquidity. As you can hopefully see, the total value locked in Solana's DeFi lending protocols hasn't grown that much in recent weeks. What this means then is that most of the additional TVL on Solana is in fact additional capital flowing in from other chains or assets like RWAs, and that is an extremely bullish sign. Add in the relentless buying by Solana Treasury companies, and it's clear that Solana still has legs. And this begs the question of how high Sol could go. In the short term, the answer is somewhere between $350 and $375, assuming Sol can break above a long-term resistance of around $250. In case you haven't noticed, Sol has essentially been chopping in a range for over the last year and a half. If it manages to break out of this range, then the target would be $350 to $375, while a crash could bring Sol down to as low as $125. In the longer term, the answer seems to be around $500, and that's because Sol has arguably been painting a massive cup and handle pattern since the 2021 cycle. If so, then a break above a long-term resistance of around $250 could foreshadow a price closer to $500 than $300, which would be epic. But this begs a bigger question though, and that's whether this is the biggest that Sol will get in this cycle. We think the answer is no, meaning that Sol could rally much higher than people expect. Besides the fact that the amount of Sol being purchased by Solana Treasury companies is massive relative to Solana's market cap, we realized the other day that it's possible, keyword, possible, that Solana could flip XRP to become the third largest crypto by market cap. And this has some fascinating maths around it. It goes without saying that XRP is going to rally much more from here, and we reckon that a likely cycle top for XRP would be somewhere around $4.5 to $5. And this would give XRP a market cap of around $300 billion. So if, keyword, if Sol was to flip XRP, this means Solana's market cap would be bigger than $300 billion. And that would translate to a Sol price that's closer to $600 or $700 than $500. And say, if you're looking to trade Sol, then you have to check out the Coin Bureau deals page. That's where you'll find sign-up bonuses of up to $100,000, trading fee discounts of up to 50%, and deposit cashbacks of up to 75% on the best crypto exchanges. To get these goodies, all you need to do is hit the link in the description or scan this QR code. Once you get on the deals page, find a deal that suits you and click on one of the Sign Up Now buttons. Now, these deals will not be around forever, so take advantage of them while you still can using the link in the description or scan in the QR code. Now, whether Sol could rally to $300, $500, or $700 in the coming months ultimately depends on Solana's upcoming milestones. Solana's ecosystem roadmap was revealed in a July blog post titled, quote, "The Internet Capital Markets Roadmap." It focused on a single milestone, Application Controlled Execution, or ACE, which will make transactions on Solana much more modular. In plain English, ACE will make it possible for applications to decide when transactions are processed and not validators, as is currently the case on almost every crypto blockchain. And this will make it possible to support more TradFi use cases that have a harder time fitting into the crypto mold, like futures trading, for example. Notably, the blog post specifies that ACE will ensure that all transactions remain on-chain, not off-chain stuff. And ACE will be rolled out across a series of upgrades lasting until later this year or early next year. The main upgrade to be on the lookout for is called Alpenglow, which was recently approved for implementation by Solana validators. Alpenglow will reduce Solana's block finality time from 400 milliseconds to just 150 milliseconds, and this is made possible through its introduction of multiple concurrent validators processing blocks. On the less technical front, Solana seems to be focused on its multiple mobile devices as the next frontier for growth. Now, for those unfamiliar, Solana's co-founder Anatoly Yakovenko has apparently turned his focus to Solana's mobile aspirations, and even Solana Labs' blog posts mostly contain mobile-related updates. Anatoly did a panel discussion at Ship or Die, which effectively confirmed this was Solana's approach to adoption. And this actually makes sense if you think about it. As a fun fact, around 60% of the world's internet traffic comes from mobile users. By focusing on mobile phones that are affordable and have built-in crypto features that have been abstracted away, you can get crypto into the hands of potentially billions of non-crypto natives. It's safe to say, though, that most of the adoption is coming from crypto natives right now. And when it comes to attracting both non-crypto natives and crypto natives, there is no bigger incentive than free money. As you might have guessed, Solana's Seeker phone has an SKR token, which will presumably be airdropped to users in the coming weeks. The recent launch of the Seeker Season program suggests that power users of the Solana Seeker phones will stand to get the biggest allocations. And this is something that we actually also predicted would happen. Crypto projects will start doing airdrops of tokens that potentially more than offset the cost of the device in question. And this could result in millions of people purchasing these crypto devices to try and get airdrops, theoretically raising crypto adoption. In practice, though, most people are likely to use Solana's phone as a secondary device until it gets better. And this, of course, brings me to the challenges that we foresee for Solana. And the first challenge is adoption. As I mentioned earlier, we found the Ship or Die conference to be a little underwhelming. There was lots of talk about things like institutional adoption, and lots of tokenized RWAs have launched on Solana since then, but on-chain activity reveals the rub. Fewer and fewer people are using Solana over time. Now, to be clear, the same is true for many crypto blockchains, but the fact that Solana has become known as a meme coin casino seems to have done some serious damage to the perception that users have of the chain. For what it's worth, this has stress tested the Solana blockchain to the point that institutions are starting to feel comfortable launching tokenized RWAs on Solana in size, and that's bullish in the longer term. And this ties into Solana's second challenge though, and that's development. Now, for those who don't know, Solana was once infamous for having outages. Thankfully, there haven't been any outages since 2024, but recent and future upgrades to the blockchain means the risk of an outage could rise. You'll recall that Alpenglow will introduce multiple concurrent validators and speed up block times. If there are any technical issues on Solana after Alpenglow deploys on mainnet, it could take the wind out of the sails of institutional adoption that Solana has been riding for the last few months. You'll remember that some crypto companies and TradFi firms are already launching their own chains. All it could take is one error on a chain like Solana for institutions to go rushing to these alternatives. And this ties into Solana's third challenge, and that's competition. As we mentioned in our previous update, the Bitcoin OGs were right when they predicted during Bitcoin's block size wars that competing on speed and cost would result in a race to the bottom in terms of centralization. Smart contract cryptos have gone full circle in this sense. They started off decentralized, but each generation become more centralized. And now we have crypto companies like Circle and Tether even launching their own blockchains. It's almost as if that was the plan all along. Let the crypto projects compete in the open, and once you're happy with how far the technology has come, you copy the code and then launch your own private permissioned version. Solana could soon face extreme competition from these chains on the institutional front. With all that said, though, these are all challenges that are far in the future. Solana's retail adoption is likely to improve as crypto speculation returns. It's unlikely to face any potential technical issues until after Alpenglow is implemented on mainnet, which could be more than half a year away. And most of the private and permissioned competitors to Solana are starting from behind, so they won't catch up anytime soon. And that's why we continue to be very bullish on Sol and believe it's likely to perform much better than most people expect in the coming months. Matt Hogan is right about the fact that cryptos only need two ingredients to explode higher: Treasury company accumulation and spot ETFs. Solana already has the former, and the latter is coming in the next couple of weeks. Sol is looking good here. And if you want to see how Sol stacks up against ETH in 2025, then check out our video on that right over here. And if you haven't subscribed to the channel yet, you can do that right over here. This is Nick. Thank you guys very much for watching, and I'll see you in the next video.